Zhiwei Zhang, Chief China Economist at Nomura, and joins us now. Many thanks for coming in, Zhiwei, this morning.
Thank you.
Is your forecast the worst of any economist?
Well, we believe our forecast for GDP growth is certainly the lowest among all economists in the market. We expect GDP growth to be 7.5% in the first quarter. And for the full year next year, we expect 7.9%. And this would be the first GDP growth below 8% for quite many years.
Why are you so negative?
Well, two things. One is exports certainly slowing down, and we have talked about that. Export data came in the weekend quite slow. And second, and more important, is the property market cooling off very quickly. And property market is a very large share of overall GDP. And we believe it has reached a tipping point. Going forward in the first quarter, we're going to see some bad data coming from there.
When you say very quickly, on percentage terms, how quickly will it be cooling off?
I think the year-on-year growth in sales already turned negative, and new housing start already dropped very sharply. And housing investment overall has also dropped quite quickly. So in the first quarter next year, I think the overall new housing start probably turn negative year-on-year growth.
Now, the PBOC obviously can take action, and the obvious one we all know is the reserve requirement ratio. You're forecasting 150 basis points. Is that next year or in the first half?
We're actually looking at 200 basis points for the full year next year. And for the first quarter, we'll see two triple R cuts, 100 basis points. And the earliest one probably in January, around Chinese New Year or the end of December, we actually may see announcement of a triple R cut effective in January.
I mean, look at the figures from the EU, obviously. I mean, actually looking at overall the data, the concerns clearly are, for example, EU shipments, as you know, from China, rising 5%. That's a quarter of the pace in July and August. And to Germany, they actually fell by 1.5%.
Yep. So
the EU crisis really is weighing on China, isn't it? How worried do you think the Chinese government is?
Yeah, I'm quite worried. I think the authorities also saw that coming and also worried about the slowing momentum. And combining with other economic data released last week, industrial production is slowing, fixed asset investment is slowing, now export is also slowing. So the signs across the board seems to point to a weaker economic growth down the road.
Okay, it's a Monday morning, the sun is shining, it's pretty cold, but give us something positive.
Well, I guess the positive side is that the authorities indeed saw the weakness in the economy, and their policy already started to loosen with all this triple R cut on November 30. I think the policy already entered a loosening cycle. So going forward, we will see more triple R cuts, interest rate cuts.
You mentioned property concerns. What about the credit bubble and the loan issue, the non-performing loans?
Right. I think that's indeed an issue, but I don't think it's a very short-term issue. It's probably going to be a long-term issue for next year or even beyond 2013. The authorities need to worry about. But in the very short term, the two concerns are property market and exports.
And it will be, if China really does slow down to your forecast growth of below 8%, how damaging will that be for the global economy?
It will be very damaging, particularly for countries relying on China's growth, such as Australia, Brazil, these commodity exporters. They will be certainly affected.
Many thanks for joining me this morning.
Thank you.